All right, everyone. Good morning, good evening, good afternoon, wherever you're tuning in from. It kind of looks like everyone's from the US, so it's pretty much the middle of the day for everybody. So today's session, we will be going over the PPP and EIDL. And the one presenting it is a special guest from Preston and Nagley. His name is Sal Russo, and we'll get a little bit more info from him here in a second. But before that, I got to do a little housekeeping. So today's webinar is sponsored by zoho.com/CPA. And that is our partner group over here at Zoho. And that is what Sal Russo is. He's one of our CPA partners. And I advise anyone who is an accountant or bookkeeper to go to CPA, zoho.com/CPA to kind of check out our partner program and see if it fits for you. And also, I wanted to kind of point out a few things about Showtime. You can see on the left-hand column that we have a questions and chat box. The chat box is really just so you can kind of say certain things like we can't hear you or you know the slides are frozen or something. And the questions box is where you go and ask questions. And these questions will be for Sal or for Val or for myself. And we will also be doing polls throughout the webinar. And these polls are for anyone who's trying to receive a CPE credit. And this webinar is for one CPE. And you need to answer 3 out of the 4 polling questions. And you need to stay until the very end to answer the evaluation. This kind of lets us know that you are the person who wants to receive the CPE. And also, we ask everybody else to take part in the poll questions and the evaluation. It just kind of helps us gauge everything. Here's kind of what a poll question will look like. So I launched it. It's just asking, how are you doing today? We got a few still alive. Great. Need more coffee? Awesome. Well, cool. So we'll go ahead and start the session. And the people you might be hearing talk today is first we have Val Steed. He's the director of accounts for Zoho. Val, are you there?
Yes, you might want to back up just one slide, Nathan, while we introduce the team here. The Zoho team consists of myself, Val Steed, Nathan Rogerson, and Tala Bakwar. And we have been doing this quite a while. My background is I am a CPA, been in CPA practice for many years, and I'm thrilled to be here because I offer quite a bit of background in the accounting space and whatever. And I'm going to also bring to the event my kind of interpretation of what's going on with all this PPP stuff, because we've been studying it for quite a while now, actually. So thrilled to be here, excited that we have an actual practicing CPA, and very thrilled that we have him spend his time with us. So thank you, Sal, and let's go on to the next person.
Yeah, Tala, are you there?
Hey, Nathan, can you hear me?
Yeah, I can hear you okay.
Awesome. Thank you so much. So my name is Tala Bakar. I'm a program manager here at Zoho. Been here a little over 5 years. If you're interested in becoming a Zoho partner, as Nathan mentioned earlier, please do visit zoho.com/CPA. You'll reach out to us. We can show you all the different benefits of being part of the program. It is, of course, free for accountants, bookkeepers, accounting professionals in general. And just wanted to say, wanted to welcome everyone to this session. If you've been to a previous Zoho session that we've held here, welcome back. If you're new to Zoho, thanks so much for joining us. And please do let us know if you have any questions. I'll be monitoring both the chat and the questions panel throughout the session.
Awesome. Well, thank you, Tala and Val. And my name is Nathan Rogerson. I'm a part of the marketing team over here. And really, my job is to kind of connect with partners and help them kind of see if Zoho is a good fit for them. And we've been doing a lot of these webinars, kind of like Val said, and we're really looking forward to this one with Sal as well. So let's go ahead and introduce Sal. Sal Russo, he's a partner at Preston and Nagley, and he's been in the accounting industry for over 20 years, it seems. And he really specializes in real estate, construction, medical, professional services, retail, and wholesale. So really, he has a pretty diverse accounting experience. And Sal, can you give us a little bit more background about yourself?
Sure. First, I want to say thank you to the whole Zoho team for having me on today. It's a real pleasure to participate in today's session. A little more background on myself and my firm. So as Nathan mentioned, I'm a CPA. I'm a partner with Preston and Nagley. I've been practicing for, I think, 20 years, maybe a little more. You start to lose track as years go by. But essentially, we're a firm of 35 professionals. We're based in Midtown Manhattan. We service clients across the country and internationally. Firm's been in practice for about 40 years. And we are a full service accounting firm. We service businesses of all sizes, individuals of all levels of wealth, whether you might be starting out a new business or you're growing, you are an individual with a growing family, or you're the owner of a seasoned established business, and you might be seeking a more creative, hands-on approach from your accounting firm. Our business is relationships. We become intimate with our clients' books and records. We help them to monitor their financial status, achieve their goals. We really take on the role of their advisor more than just their tax preparer. And as Nathan mentioned, our practice is very diverse. We service clients in many various industries. We provide them with tax compliance, tax planning services, business management services, CFO, bookkeeping services. We assist them with tax diversity, and we also help them get set up. A lot of times clients come to us basically just starting out, and we help them navigate issues and registrations in the areas of payroll, workers' comp, sales tax. They might have foreign disclosure compliance requirements. So, I certainly invite everybody attending today's session to check out our website after today's webinar to learn more about how we can help you and your businesses.
Yeah, well, thank you, Sal. And before we continue, I kind of wanted to point out one other thing on the left-hand side. You can go and see the handouts, and we actually have a link to Pressing and Nagley's website in there. We also have a link of today's webinar, and we have a link of the forgiveness application. But as you kind of see throughout the presentation, you might want to hold off on the application just because it seems like it's being revised a lot, but we'll kind of get to that later. And as we go through Sal's presentation, he'll kind of be going through the slides, but feel free to ask a question in the question box, and we'll be sure to present it to Sal, and he can try to answer it to the best of his ability. And yeah, so let's go ahead and get started. Sal, are you ready?
Yeah, let's do it. Okay, so starting off with our first slide, I just wanted to also mention to everyone that just as a side note, my firm has helped clients obtain, we've been tracking the numbers, it's incredible numbers. We've had them obtain about over $5 million in SBA economic disaster injury loans and over $20 million in PPP loans. So this is definitely an area my firm can help everybody get as much financing as they can. So let's start with our first slide. So the SBA Paycheck Protection Loan, otherwise known as the PPP. A few considerations to keep in mind. First of all business entities are okay to apply. Even if you have no employees, that doesn't mean you don't qualify. For example, if you're a self-employed individual and you file a Schedule C on your tax return to report your business activity, you do qualify. In certain cases, partnerships, for example, where only the owners are the ones working in that partnership, that may qualify as well. We can use guaranteed payments, for example, as substantiation for the loan. So there's a number of ways you as a business owner can qualify for this loan. Everyone has their specific circumstances, and of course that has to be evaluated. So you want to take a look at your business and its structure just to make sure your specific circumstances fit the mold. Now, just to go through some brief bullet point information on the PPP loan, I want to mention that the extended deadline is August 8th. That's our last bullet point, but it probably should be the first one. It was originally closed on June 30th. Then there was a last-minute extension where they extended to August 8th. So that's next Saturday. So if you guys are going to move on this, please act fast. Just a couple of rules on the loan. So first of all, you do have to have 500 or fewer employees, and you must have been in operation on February 15, 2020. Majority of clients that I've encountered fit that, satisfy that rule. So I don't see many people that have an issue with that. A loan calculation, it's pretty simple. It's 2.5 times your average monthly payroll cost. Now, what does payroll cost mean? Well, the SBA does define payroll costs, but the simplest explanation I could tell you is that almost all the costs related to an employee, and we're talking about businesses with employees right now, but that would include wages, health insurance, some state and local payroll taxes. The SBA and the lender that you're applying through, they will define this for you during the application process. So I wouldn't worry too much about that right now as what payroll costs are defined as. Most people are going to have expenses that fit into that basket. And again, if you're self-employed, we'll talk about that in a moment, what that means. But basically, there is a cap on the payroll wages that can be used to qualify for the loan. That's $100,000 per employee. Now the rules are a little different. The rules are a little different for self-employed individuals. The self-employed individual would really be treated as the employee, and that $100,000 max per employee applies to the self-employed individual. So if you're an individual and you're a Schedule C filer, which a lot of you may be, and the term Schedule C, you probably sounds familiar. The loan is maxed at basically $20,000 roughly. In our next slide, we'll get to the nitty-gritty of that. But I just want to mention that if you are a self-employed individual and you are filing a Schedule C and you have no other employees, you're basically looking at about a $20,000 loan. The terms of the loan are, and now this is if it doesn't get forgiven, of course. It's 1% of an interest rate on the portion that's not forgiven, and it's a 5-year payback. Good thing about it is that there's no payments for the first 6 months for that payback period from the funding date. So you get a little bit of breathing room. But of course, our goal is forgiveness, right? We want to make sure that this is fully forgiven and none of it needs to be paid back. On the topic of forgiveness, let's touch on that for a minute. The loan forgiveness is going to be based on the amount you spend on payroll costs for 24 weeks. Initially, that was an 8-week period. They changed the rules on that. They extended it to 24 weeks. The costs that are going to qualify for the loan forgiveness are going to include rent, utilities, payroll costs, of course. Essentially 100%, in our opinion, we've talked about this to great lengths. We think, look, if you're in business and you got the loan and you're continuing in business, we really feel 100% of these loans should be forgiven. The only way I could see that some of this loan money won't be forgiven is if you're not in business and you're not paying your employees and you have little costs that fit into the forgiveness basket. Then you might have an issue with the forgiveness, but it's a long period of time, 24 weeks. So hopefully most businesses are back in business, and we'd like to see that as much as possible, of course. The forgiveness applications themselves, those will be submitted to the banks or to the lender that made the loan, that granted the loan. The bank or the lender is acting as a middleman between the SBA and the business owner, or the business, I should say. Now, at the moment, the rules say that costs used to forgive the PPP loan will not be tax deductible. However, there's been some talk of that possibly changing. Right now at the moment, the Senate, I think as recently as yesterday, they came up with a plan. I believe it's called the HEALS Act, and there's a lot of stuff in there, and that's got to go through Congress, and that is probably going to get tossed around and changed. So a lot of this stuff is up in the air as far as forgiveness goes and the tax deductibility of the costs. So look, we hope that it's a favorable result here. That it would be great if you could get the PP loan forgiven and deduct the costs that you can use to substantiate that forgiveness. But we'll see how that works out, and we'll keep our finger on the pulse there. As far as the process for the application goes, and a lot of you may have already submitted applications. I hope so, and if not, there's still time, as I mentioned earlier on. You apply for the loan through your bank or through other financial institutions. Most of these applications are done completely online. And, there's a bunch of online institutions that we've been using, such as Bluevine, Cabbage, PayPal, just to name a few. But just be aware that a lot of these financial institutions may not accept applications all the way up to the deadline. For example, I learned yesterday that Citibank is actually cutting theirs off on August 3rd. So you just got to be careful. There's a bunch of them out there that'll accept applications, but if you're thinking about going to your bank or to a banking relationship you already have, you may want to check in with them to see when they're going to stop accepting applications. So definitely act fast and move on it now. Funds are still available now. That could change any day. So definitely, hit the gas on this. At this moment, I'm not aware of any extensions that are in the works to extend the deadline any further. I've had people ask me that question. And look, overall forgiveness, I would say the rules are, may change. So I would say if the 30 or 45 days of the application process taught us anything, it was that these rules will change, and the banks may modify them as well. Not the banks, but the SBA may modify it as people go through the forgiveness process. So let's see what happens here. And like I said, 24 weeks is a long period of time. We'll just have to keep our ear to the rail and see what happens there. Okay.
Yeah, for sure, Sal. I definitely agree with you about that.
Yep. Yeah.
Before we kind of continue, I wanted to launch the first poll question.
Sure.
So I'm going to go ahead and launch it, and everyone, if you can see it okay, just go ahead and answer it. Remember, just a reminder, if you want to receive your CPE credit, you have to answer 3 out of the 4. And also, it's just great if everyone kind of answer this as well. So Sal, I did have a question for you, though. Did you, with the 24-week period, are you seeing it harder for clients to kind of keep employees kind of employed that whole time, or are they just kind of getting that loan and they're just facing it appropriately?
Well, for people that are in business and if they're in business and they have their employees on location, that means their employees are being productive. They're paying their employees. Their businesses are operating. What I'm seeing with a lot of employers that unfortunately are shut down or have been shut down, for example, people in the hospitality industry, restaurants, it's tough. A lot of them have already exhausted their PPP funds. They are having trouble keeping their employees on the payroll, obviously due to financial problems and issues. I see a lot of them initially when they get the PPP funds, they bring all their employees back. They put them back on the payroll. But to that moment, maybe the employees were on unemployment, so they come off unemployment. People start paying them, putting them back on payroll, and then once those PPP funds are exhausted, the business owner kind of throws their hands up and says, "Look, guys, I'm sorry, you got to go back on unemployment." So, in those unfortunate situations, I see employers sort of sending their employees back to unemployment, and in the hopes of when their businesses are back up and running, let's say August 1st or September or whatever, they basically are telling employees, "Look, we're going to try and bring everybody back." So obviously, it's a problem for employers as well, because when you think about it, you've got some good employees out there. You hope they come back, but a lot of employees are not going to sit around and wait for their old job. If they have another opportunity, they're going to take it. So it's kind of a mixed bag.
Mm-hmm. Yeah, for sure. So let's go ahead and move on to the next slide, which is going over the calculation of the PPP.
Yeah,
it's pretty simple. I'll let Sal kind of walk through this.
Yeah, this is pretty straightforward. I wanted to highlight what a self-employed individual filing a Schedule C would encounter in the calculation. It's pretty straightforward. Let's say you're a self-employed individual. I want to go through 2 simple examples of what a self-employed individual may experience with this loan. Let's say your net income from your business was $100,000. or more in 2019. And I say 100,000 or more because remember, on our previous slide, I mentioned that the SBA rules, they dictate compensation for the loan calculation purposes as capped at $100,000 per quote unquote each employee. The business owner being the only employee of the business, they fall under those same rules. So for your reference, your net income would be the profit listed on your tax form Schedule C, line 31. We listed that in there for your reference. And now with these facts, your loan amount is calculated as 100,000 divided by 12 months because they look at your average monthly compensation, and then they multiply that by 2.5 times, which is essentially about $20,000. It's $20,833 to be exact. That would be your loan amount. Now let's use another example, same circumstances, but let's say your net income was 60,000. Again, very simple and straightforward. The loan amount would be $60,000 divided by 12 months times 2.5, or $12,500. And as I mentioned earlier on, based upon the new 24-week period, we see that most likely 100% of the loan will be forgiven with self-employed individuals for sure. And let me just illustrate that point. Why I say this. We say that we expect virtually all self-employed individuals to have that loan forgiven, because if you take that $100,000 example, you take the $100,000, you divide it by 52 weeks, okay? Then you multiply that amount by the 24 weeks. That's $46,153, which is more than the loan amount, which was originally, of course, $20,833. So we look at this and we say, all right, well, 100% of the $20,833 was spent on payroll. For a self-employed individual, that payroll would be their own compensation. You're taking the money in and you're paying yourself. You might be transferring it from your business account to a personal account. We see some people paying themselves a standard amount each week or each month just to show the flow of cash. So, we see a lot of different things here, but the math here ensures that the loan will be 100% forgiven. Next slide, Nathan.
Okay. Well, yeah, thanks for kind of going over that. Yeah, I'll go
Sal,
ahead and
we do have one question here that I'd like to hit Sal with on this, because unemployment is something I really have never dealt with. But this person says, if self-employed with an S corp, can I go on unemployment?
Yes, you can, but you cannot continue paying yourself payroll from that S corp. So the timing on that is very important. You got to treat yourself like an employee, like you would any employee. You've got to stop your payroll. You got to file for unemployment. You collect unemployment, and then you could apply for the PPP in the meantime. And once you get the funds, then you stop your unemployment. You start paying yourself back on payroll, and then you can go off again later on. They've really expanded the rules on unemployment due to this pandemic. So we're seeing people who would have never qualified for unemployment before qualifying for unemployment now.
Cool. Thank you, Sal. I have another question. I saw it in the chat section. Just a reminder, if you have a question, post it in the questions box. So if you have employees, with the changes from 8 weeks to 24 weeks, is it now required that employees remain employed for the full 24 weeks in order to be eligible for the forgiveness? That was a question from someone. His name was Josh. But yeah, I was kind of wondering that myself, and I can see that being a little bit more challenging for businesses.
Yeah, that's certainly a complicated issue. The whole issue of full-time equivalent employees always comes up in the conversation with this loan. And it's a complicated issue. Quite honestly, I feel the rules may change on this or be modified to be a little more lax or a little more flexible. I've read that the full-time equivalent calc can be done more than one way. There's a safe harbor method that measures full-time employees on February 15th, and then it measures that number against the average from February to April of 2020. Generally speaking, yes, the spirit of this loan is so that you keep your employees on for the duration of the period. What I would say is that for most people, and of course we all have to have specific conversations based on someone's circumstance, but generally I would say try to rehire as many of your employees that you can. Try to keep them on as long as you possibly can. And then, let's take a look at how much PPP money you spent, how long the employee was back on payroll, and let's project it out. Let's see how far your runway is. And if, look, if you have to have that employee back on the payroll at a certain date, you may have satisfied the full-time equivalent requirement by that date, just by having them on payroll for a certain period of time. But I would say generally my advice is to try and keep them on as long as possible.
Hey Sal, this is Tala. Sorry to jump in real quick. One of the points that people are making in the chat is just that I think we're getting an echo from whenever we speak because of a loudspeaker on your end. So if you could mute yourself whenever Nathan or Val are speaking, help others.
Yeah, sure thing. Sorry about that, everyone.
No worries. Thanks so much. Sorry to interrupt.
No problem. Do we have any other questions at this stage?
Yeah, we have a ton of questions. You can actually look at the questions tab as well if you want to see if you can tackle some of those, and you can kind of just tell me which one you think's appropriate, and I can project it onto the screen as well. But yeah, go ahead and tell us what we need for the PPP loan. I think there's a lot of confusion with that, and also I guess you might need to just contact your bank, but generally these are the things you'll probably need, correct?
Yeah, this is just a generic listing of items. You may need more than this. And I did scroll through the questions briefly. I'm going to get back to those questions and just eyeball them once I'm done with this slide. But essentially, in this listing, we laid out what most lenders have asked for, mainly for self-employed individuals. The list is a little more robust. But this is what we see for most of the applications. At this stage, we see most applications being submitted for self-employed individuals. Seems like most of the businesses have applied already during the early stages of this program. I think a lot of self-employed individuals were not aware that they were eligible. So we're seeing a large influx of that now. But in any event, this list is pretty simple. Again, it may vary by lender, but essentially you need a copy of your driver's license, copy of the business license. Now, this could be any license, really. A lot of times a formation document or an incorporation document will be just fine. If you have an LLC, you can provide the formation document of the LLC to the bank or to the lender. A copy of your February 2020 bank statement. Almost everybody asks for that. And then if you filed your 2019 income tax return, individual income tax return, you can give them a copy of your Schedule C, as well as any 1099s that you received. And as I mentioned at the bottom of the slide there's some of the lenders that we've had a lot of success with submitting applications. There's Blue Vine, there's PayPal, and there's Cabbage. As I said, we've submitted a whole lot of a ton of applications to these 3 online lenders in particular for our clients, and we've had great turnaround. I mean, you know, a turnaround like within 24 hours they're funded from the moment that you submit the application. So they've got a real great streamlined process. We've seen these lenders in particular act so much quicker than banks. And early on, banks were basically taking the position that if you bank with us, you could submit an application. If you don't, you can't. These lenders, they have no requirement like that. You could be banking with Chase or Citibank, and you go right to them, and they'll fulfill your need there. So let me take a look at these questions and see if I could just.
Awesome. Thank you for touching base on that, Sal. Awesome. Thank you for touching base
Launch
on
the-
that, Sal. I'm going to launch the second. I'm going to launch the second poll question. And Sal, as I'm doing that, go through the questions to see if anything kind of piques your interest, and we'll try to cover that throughout these slides as well.
Sure. So I see a question from Jeffrey. Should a partnership of 2 people, no employees, LLP, it's an LLP, apply for the PPP twice for each partner? No, what you do there, and Jeffrey, you can give our office a call just to get some more facts from you, but I would tell you that you'd file an application for the partnership, and you know, in your situation, if you're paying, if the 2 partners are paying themselves guaranteed payments, you know, that would be the qualifying factor there. You could use those guaranteed payments to substantiate the loan. A lot of times with the guaranteed payment issue, I will tell you, you know, some partners don't really differentiate what's a guaranteed payment and what's a profit distribution. We can help you to navigate that issue and sort of put you in the best position to qualify. Because you know, a lot of times that's a cosmetic issue. The bones of the situation is the 2 partners are taking compensation, and we want to effectuate that on the application. So I hope that answers your question. If not, you could always contact me after the session. Let's see here. Stephen Davis asks, will there be a second round of PPP loans? I already applied and received a loan as a small amount. No, at this point, we're not aware that there'll be a second round of PPP loans. You know, again, anything is possible. It could change. They extended this deadline. If you already received a loan, you're not eligible to reapply again. But, you know, in the absence of a second round of PPP loans, there are other programs that the SBA is working on. For example, there's a program called the Main Street Lending Program. Right now, that's in the stage of the SBA approving lenders for that program. So they're going through bank by bank and lender by lender to approve them so they can qualify for that program, so they can act as the intermediary, similar to how they acted with the PPP loans. So, you know, what a lot of professionals, I'm sure, are doing, they're keeping their clients informed. We're doing the same. You can go to our website. We are emailing, we're sending out email blasts as these programs are being rolled out. So you can go to our website, put your information on, and get on our mailing list, and then you'll be notified as soon as these programs are rolled out. And that Main Street Lending Program is something that is geared towards small businesses, similar like to the PPP program, but scaled a little smaller. With the PPP program, everybody heard about, you know, Shake Shack and all that. This is going to be more geared towards small businesses, you know, real small businesses, I should say. Let me see if I could just get one more in. Let me see. Okay, Clifford asked, can funds only be used for employees, including self-employed, at the time of getting the loan, or can it be used to hire new employees, even if you're first employee besides yourself? Yeah, absolutely. You can take the funds and you can expand and grow your employee roster. That's a wonderful thing, of course. That means your business is growing. So, if you receive your funds and you'll absolutely qualify for forgiveness. You'll absolutely restore your employee count because you're adding more people. So the answer is absolutely yes. One last question from Jimmy. I did not start my business until June 2020. Can I apply for the PPP loan? I don't believe so. Unfortunately, you would have had to have been an existing business on that February 15th deadline. That February 15th date. They specify that. They ask for a copy of the February 2020 bank statement. So that unfortunately is out. I'm going to try and come back to some other questions. I want to hit a few more slides, and maybe I can hit these other questions at the end. Okay.
Yeah, for sure, Sal. Let's continue.
Great. Okay, so let's hit on the SBA Economic Injury Disaster Loan. So this is a true loan, no forgiveness. We tell clients, apply for the PPP first, see what you get. Hopefully that's enough. If not, let's look at some traditional financing here. So the SBA Idle Loan, as it's commonly referred to, basically the rules on this loan are you can borrow up to $150,000, assuming you qualify. The terms are the interest rate is 3.75%. It's pretty good. 30-year amortization on the loan. The payments are deferred for 12 months from the date of funding, which is great because it gives businesses an immediate capital infusion and some breathing room on the payback. But just be aware that the interest on the loan continues to accrue. You must apply directly with the SBA on their website. There's no bank or lender involved in the middle like the PPP. This is you and the SBA only. There was a $10,000 EIDL advance grant, which has been discontinued, unfortunately. With that, you could have essentially qualified for $1,000 per employee as free money, basically, but that's been closed off. And the applications were closed for this program for a period of time when they first rolled out the program, but it's been reopened since June 15th. Funds are still available, so get those applications in now if you can, if you're interested in this loan. There's no commitment in applying. Assuming you are approved for the loan, the SBA will give you the opportunity to either accept the loan or reject it if you find that after applying that you either don't need the money, you simply change your mind, whatever the circumstances are. Just do be aware that they do run a credit check on the individual owner of the business. So it is possible that an application could be rejected just based on that. So let's go to the next slide, Nathan. Okay. Just some other COVID-related issues I wanted to touch on real quick. As most people are probably aware, the tax deadlines were extended to July 15th. Sorry, got distracted there for a second. I think we're all aware of this as we're past that deadline now. If you didn't file an extension to meet that July 15th deadline, file your return as soon as possible. Because if you do end up owing any income tax with that 2019 filing, as of this moment, you're accruing interest and penalty right now. So we want to make sure that anybody that had to file an extension, if you didn't, get that taken care of right away, get it addressed right away. If you did file extensions, great. Then you're extended to either September 15th or October 15th, based upon your circumstances, such as what kind of business entity you are, or what your filing requirements may be. But if you're an individual, self-employed individual filing a Schedule C, as I described earlier on, and in the seminar, you would be extended to October 15th. If you're a business entity, your deadline would be September 15th. Business entity defined as an S corporation, you're filing as a partnership. Those are examples of that. Another great thing that I want to mention is with the CARES Act that was passed earlier in 2020, if you find that you need to take withdrawals from your retirement accounts in 2020, you can do so without penalty. The CARES Act that was passed did a few things regarding this topic. Number one, it allowed participants in some retirement plans, including 401ks, IRAs, which are some of the most popular plans that are out there that people have. You can basically take a distribution, an early distribution, I should say, of up to $100,000 during 2020 without paying the 10% penalty. Normally, the IRS would impose a 10% penalty on any early distributions from a retirement plan. Early distribution means the account owner is under the age of 59 and a half. Now, just note that this $100,000 that you can withdraw early is a total amount per person, no matter how many retirement accounts you have. It's not a per account number. The other thing it does a couple of things. Let me hit these different things. It suspends the mandatory 20% tax withholding requirement that normally applies to early distribution from certain retirement plans. If you decide not to withhold, by the way, just keep in mind that you will owe the tax on the withdrawal later on. A lot of times clients don't indicate the withholding, and then there's a shock, a big surprise in April the following year when there's a big tax bill. So you just want to keep an eye on that. If you are not doing withholding, you want to talk to your CPA about planning for that later on. Now, you'll still owe income tax on the amount you withdraw, like I mentioned, but the law does give you some flexibility on paying that income tax. You could choose to pay the tax over 3 years, or you could pay it all in 2020 if your income and your tax rate is much lower in 2020. So, look, as 2020 is expected to be a bad year for most businesses, you should definitely plan strategically for this, choosing the year or years that you feel your income and your tax rate will be the lowest. Again, your CPA can help you with this. My firm can help you with this, with planning. This is a very important piece of the puzzle in withdrawing retirement account funds. You definitely want to make sure that you plan for this. If your business bounces back in 2021 or 2022, you're going to want to pay that tax now in 2020, so you take advantage of the lower tax rate. And additionally, planning is so important with this topic, because the last point I'll make is the CARES Act also gives you up to 3 years to put that money back into the retirement plan. The old rules only gave you 60 days. So if you pay back 100% of the funds that you pulled out within 3 years, you won't owe any tax on distributions. It's essentially an interest-free loan. However, this is the confusing part. If you paid any tax on the withdrawal before you pay back the actual withdrawal funds, you can go back and file an amended tax return to get back any tax you paid before paying the money back to the retirement plan. So I know I'm throwing a lot of things at you guys and might have confused people. So, I'm happy to answer questions if you want to call the office and we could chat about that. But my main point I want to drive home is if you're considering withdrawing money out of a retirement plan as an early distribution, you want to make sure that you think about your plan on either paying it back or dealing with the tax liability from that decision. Stimulus payments. Most people received it already. If you haven't, we listed a website there that you can go to and basically check on the status of things. I have some people calling the office asking about that. Basically, the stimulus payments, I think most people are aware, is $1,200 for a single individual, $2,400 for people filing as married filing joint, and then $500 per qualifying child. There were some income phase outs. For example, if you're a married couple with 2 kids, if you made over $150,000, there's a phase out there and your stimulus payment may have been reduced. So these income phase outs are based on 2018 or your 2019 tax return, whichever was more recently filed. I had people in the situation where, their 2018 return looked great, their income was high, and their 2019 return was lower. So I encouraged them to file early, even though the extended deadline was July 15th, just to get that tax return filed to qualify for more money in that stimulus payment. If you didn't do that and you got less, it's okay. Your 2020 tax return will reconcile that shortfall. We have yet to see what that looks like. The 2020 forms are not out, so once that happens, we'll know more. And I should just add, there very recently, in the last couple of days, there may be a second stimulus payment in the works as part of that HEALS Act that the Senate just wrote. At this current moment, the chatter is that it's a $1,200 stimulus payment plus $500 per dependent. That's different than the original $500 per qualifying child. Right now, the language says that if you have a dependent, it could be a sister that lives with you or a parent. Right now, that would qualify. But I wouldn't hang your hat on that. Congress still has to approve it. These acts get tossed around and debated, so it's a little early to discuss that at this point. Just one last point on this that just came to my mind. If you haven't filed your tax returns for 2018 or 2019, or you're not required to file, the IRS provides a non-filer tool on their website that you can try filling out, and perhaps you might be able to get your stimulus payment that way. Otherwise, the plan is, look, give us a call and we can get your income tax returns up to date so you can get your proper stimulus payment. That's
Awesome, Sal. So I'll kind of step in here real quick. I'm going to go ahead and put up the last slide, which is Sal's information. But we have Sal for about 13 more minutes. So he'll go through the questions box and try to answer as many questions as possible. And Sal, if you can go through the unanswered questions, I would appreciate it as well, because a lot of those questions are, we're not really qualified to speak on those. And I will go ahead and launch, while you're looking through those, the third poll question.
Yeah, there's two categories of questions there, Sal: unanswered or answered. Go over to the unanswered for a second, if you don't mind, because there are a few that are related to LLCs and unemployment stuff that I didn't really dare stick my nose into.
sure.
For example, there's one: I've been operating for 2 years developing software. I officially became a Virginia LLC on May 6th, 2020. I don't think you're in business in February 2020, so I don't think you can get anything.
Yes, that's correct. And I do apologize for the feedback here. I am speaking into a speaker, so
I'll go.
I see one question Stephen asked: as a self-employed individual, can I go on unemployment but still have the business generate some sales? I would tell you, just be careful with that. You can certainly apply for unemployment. Nothing's going to stop you from continuing to operate your business. We don't know what a reconciliation of that would look like. It's going to be difficult logistically, I would imagine, for the Department of Labor to basically compare what a self-employed individual, the timing in which they would earn their services, earn their income. Was it a situation where, look, a client paid you now for services that you provided back in February when things were still when the world was still operating? Is it a situation where you provided services now and they paid you later? it's difficult for that reconciliation to happen. So I would just be careful of that. Technically speaking, you are not supposed to be working while collecting unemployment. So just, go into that with eyes open. I've heard different people say different things on that, but I would just be careful with the Department of Labor on that. But certainly if you're not in business, obviously as a self-employed individual, and you're unable to work, definitely apply for the unemployment. Fawn had a question: has the IRS changed the rule related to debt forgiveness related to the PPP loans? If not, does that mean the forgiven part of the loan is income to the business? Yeah, that's correct. Basically, under the current rules, essentially, the forgiven part is income. The way they word that is they say that the costs that you use to forgive the loan become non-deductible. Right now there's discussion of changing that rule. It may be they're waiting to see how things turn out with these forgiveness applications, where the economy goes. They might be a little more generous, the IRS that is. So, but right now as it stands, yeah, it's basically income to you. Xavier's got a good question. Does the business have to be in financial distress in order to get the loan forgiven? We went over this in great detail. The language on the applications is very, very vague as far as what the definition of financial need is. There's a number of checkboxes that they ask you to initial or answer yes to on that application. And basically, one of the questions is, do you feel you've been affected by the COVID pandemic? Very vague, very broad. What does that mean? Do you feel you're going to be affected now? Do you feel you're going to be affected in a fall? To what extent were you affected? Did your income go down 1%, 80%? So I think by answering yes to that question, because it's so broad, almost everyone is going to qualify and satisfy that. It's a tricky rule. I would just be careful with that as well. You are signing a legal document, so just be careful with that checkbox there. But I would say most people would qualify by saying yes to that. Kevin had a question: do owner managers qualify as full-time employees? I would say yes. If this is an S corporation and they're on payroll and they continue to be on payroll, yes, they're full-time employees. If this is a partnership or you're self-employed, the partnership, there's rules there with what qualifies as a full-time employee. I would say if you're receiving guaranteed payments, then yes, that's basically a form of payroll. If you're a self-employed individual, well, then the answer is absolutely yes. Allison asked if file for 1040. If I filed a 1040 and not a Schedule C, can I apply for the PPP? I'm guessing what probably happened there is you included the income but no expenses. I would say yes. She writes 31 reflects a loss. Oh, I see. Yeah. All right. Well, if you reported a loss, meaning you had no net income, then the answer is probably no. If it's a situation, and this might affect other people, if it's a situation where you're reporting the income and no expenses, then yes, then you would qualify. Joanna asks, Joanna, you can call our office. We have the last slide here has our contact information. That's my direct number there. That's listed there. My cell phone number is listed there as well. You guys are welcome to call me anytime. Please check out our website as well.
Yeah, on that note, Sal, I'll go ahead and post the last poll question. And really, this question is just asking if you want to be contacted by him, and Sal can actually reach out to everyone who answers yes on this. And yeah, Sal, if you could just go ahead and go to the questions unanswered box on the left-hand column, just click on questions and it'll just be on the unanswered area. You can go ahead and see some of those questions. They are a little bit higher level for me. Trying to answer as many as I can.
Got it. Yeah, I see that there. Okay. Let's see. Okay.
Okay, yeah, I've been trying to jump up and down the questions list, folks. Let me just say something to everyone. We're probably not going to get to all these questions here. We will try to kind of review them at the end of the session and try to get your information back. If by some chance you don't hear from us, Presty is offering to reach out to them with that same question through email or whatever, and see if we can't get a staff person at the firm helping you, at least getting you answers to all these questions. And we're going up and down as quickly as we can and trying to answer as many of these as we can. I will tell you one thing, bottom line, they're not going to really move back this date of application for PPP. In my opinion, it's not going to be moved. So if you're saying I haven't applied yet, I really need to apply. Yeah, get with the bank, get going. Honestly, don't be frightened from this whole thing because, as Sal mentioned, we really believe the government is moving in a direction where they're pretty much just trying to hand small businesses money as long as those small businesses are turning around and handing that money to their employees to pay them. And they're not trying to sting anybody here, penalize anybody. The only people they've already kind of gone after, and you might have seen a few news stories on this, is people that fraudulently applied for PPP loans. And what businesses would be that? Well, quite frankly, where they had too many employees where they should not have been employing. Cases like that, where they literally, were either misstating stuff on the form. One case I saw was where a person had some felonies against them. If you have felonies outstanding, you can't apply for a PPP loan. There's a few other things like that. Other than that, you don't have any felonies outstanding on you. It doesn't matter if you are a non-citizen, but you own a business and you're paying people in the U.S. Get in there and apply because what matters is that your employees all have U.S. addresses. Those employees can also be non-citizens, and it all works right now. They're trying to help all kinds of businesses. So get with a bank, get with a loan. We don't have much time left to get you going on that. And let's get you down the stream in the application process because it's a chance to get some help.
Yeah, I agree absolutely with everything Val said there. And, there are a ton of questions here. We're going to run out of time.
One last comment here. I did have a question. Is this going to be recorded? And I need to let everyone know this will be recorded and sent back to you later.
Yeah, I just want to add real quick. There's a ton of questions here in the questions area. I would just ask everyone if I'm not going to be able to answer everybody's question now, but I'd love to be able to answer them. You can email me your questions. You can give me a call, give my office a call. We'll be happy to help you here.
Yeah, Sal, do you see any other questions you
Oh
want to
yeah,
answer
sure.
before
Yeah,
we
I could
kinda
hit one
end
or
the
two
session?
more. So Michael Flanagan asked, so as a Schedule C, I don't need to pay myself a payroll check from business to personal if I'm just taking regular distributions as needed. That's correct. Just take your regular distributions. Just make sure that you satisfy the that $20,000 loan amount for forgiveness, and you should be all set. Had another question on, can I use a PP loan for a real estate investment? Well, as long as that real estate investment has employees, I would say yes. You should be able to qualify. It's as far as the rules go, as long as you have employees and you can substantiate or satisfy the payroll costs part of that substantiation, you should be fine. There's a question on a partnership where you only have partners, no employees or payroll, and you use Schedule K1s. Everyone's paid.
Yeah, Sal, I really do appreciate you kind of Yeah, Sal, I really do appreciate you kind of going through these.
Yeah.
Sorry about this, everyone. But yeah, I appreciate you kind of going through everything, Sal. And we really do appreciate your help in all this and Pressy and Nagley's partnership with Zoho. And on that note, we're going to go ahead and end the session. And if you want to receive a CPE credit, please fill out the evaluation that happens at the end of as soon as I end the session. Stay on the screen after I end it, and you'll be able to see it. And also, anybody who wants to fill out the evaluation, I would appreciate it as well. And sorry about any sound issues we had today. Regardless, I think we had a good session. I think Sal was able to answer a lot of great questions. And if your question wasn't answered, go ahead and reach out to Sal through his email, and I'm sure he'll be happy to answer it or give you any guidance he can. All right, everyone. I'll talk to you all later. Bye.